So, what if the coins you've been casually mining on your phone for years could actually turn into real, spendable money? This is the core question millions of people around the world are asking about the Pi network. It's a cryptocurrency project that started way back in 2019 with a super simple premise. Let anyone mine crypto directly from their smartphone. The goal was to make digital currency accessible to everyone, without needing powerful, expensive computers or a deep technical understanding. You just download an app, press a button once a day, and watch your Pi balance go up. It's an idea that has been both incredibly popular and highly debated. The project grew at an astonishing rate, attracting a massive global community of users who call themselves pioneers. The daily tap became a ritual for many, a low-effort bet on a potential future. The entire concept was built around creating a widely distributed currency from the ground up, focusing on building a large user base first before assigning any real-world monetary value. For years, the Pi coins existed only within the confines of the app. You could see your balance, but you couldn't send it to an external wallet, you couldn't trade it on an exchange, you couldn't use it to buy a cup of coffee. This led to a lot of skepticism, with many observers questioning if the project would ever deliver on its promise of creating a functional, valuable cryptocurrency. The long wait tested the patience of its community, but it also allowed the network to grow to a scale that few other crypto projects have ever achieved before their public launch. The central promise remained. One day, this enclosed ecosystem would open up to the rest of the world. That long-awaited day finally arrived, marking a pivotal moment in the project's history. The transition from a closed, theoretical network to an open, functional one was the step everyone had been waiting for. It was the moment the rubber was supposed to meet the road, where the digital points on a screen had the chance to become something more. The journey from a simple mobile app to a live blockchain network has been a long and winding one, filled with technical challenges, community debates, and the ever-present question of its ultimate worth. A major turning point for the entire Pi ecosystem occurred on February 20, 2025. This was the date the project officially launched its open mainnet. In simple terms, think of the mainnet as the final live version of a blockchain. Before this, Pi was in a testnet enclosed mainnet phase, like a closed beta for a video game. You could use it, but only within a controlled environment. The open mainnet launch was like opening the doors to the public, allowing the Pi blockchain to connect with the outside world for the very first time. It was the moment Pi stopped being just an app and became a real public cryptocurrency network. So, what did this opening of the doors actually allow? The most significant change was that it enabled external connectivity. For the first time, pioneers could send their Pi coins to wallets outside the official Pi app. Cryptocurrency exchanges could finally integrate with the network to list the PI token for trading. This was a huge deal. Before the open mainnet, any PI on exchanges was essentially an IOU or a future, not the real coin, which caused confusion. Now, real transfers of actual PI coins could happen on a public ledger. The launch triggered Pi's entry into the broader crypto market. Supply and demand could now shape its value in a tangible way. Miners finally had a path to convert holdings into other cryptocurrencies or traditional fiat money like dollars or euros. This shift changed Pi from speculative mining into a live economic system with real-world consequences. The network was no longer just a social experiment. It joined the global digital economy. This step was critical for establishing legitimacy and utility. Without an open network, Pi couldn't support real-world applications, decentralized finance, or integration with merchant payment systems. The open mainnet laid the foundational infrastructure for developers to build on Pi and for businesses to start accepting Pi as payment. It was the technical green light the community and market had been waiting for, signaling the move beyond user acquisition into building a functional, valuable ecosystem. Now, in 2026, we can finally start to see what that reality looks like. Before anyone could use their Pi on the new open mainnet, they had to go through a couple of important steps: KYC and migration. KYC stands for Know Your Customer. It's a standard identity verification process used by banks and crypto exchanges to prevent fraud and comply with regulations. For Pi, KYC was essential to ensure miners were real individuals, not bots or fake accounts. This helped clean up the network and ensured coin distribution was as fair as possible. One person, one account. The KYC process was a massive undertaking, requiring millions worldwide to submit ID documents. Once a pioneer passed KYC, they became eligible for the next step: migration. Mining in app complete KYC migrate to Mainnet wallet use. Pi on open network migration is the technical process of moving your mined Pi balance from the app's off-chain ledger to your personal wallet on the live Mainnet blockchain. This is the moment your Pi becomes truly yours, recorded on a decentralized ledger and secured by your own private key. By 2026, the network had made significant progress. Over 16 million users had successfully migrated their Pi to the mainnet. However, the process wasn't without its hitches. Some users found their accounts stuck or blocked, leading to updates and fixes from the Pi core team. In 2026, the network rolled out what it called second migrations. This update unblocked approximately 2.5 million accounts and expanded migration access for others who were previously ineligible. The second wave also included migration of additional bonuses, such as rewards earned from referring new members to the network. These referral bonuses were calculated based on whether your referrals completed their KYC, creating an incentive for the entire community to help secure the network. This meticulous process of KYC and migration serves a dual purpose. First, it adds a layer of trust and security that many other crypto projects lack, which can be appealing to mainstream users and regulated businesses. Second, it creates a verified user base that developers can build for. Knowing that the 17.7 million and counting KYC verified pioneers are real people makes the platform much more attractive for social apps, e-commerce platforms, and other services. It's a slow and sometimes frustrating process, but it's a deliberate strategy to build a robust and human-centric network from the inside out. Now, in 2026, we can finally start to see what that reality looks like. Just like your smartphone's operating system needs regular updates to run better, performance, security, and capabilities, in the spring of 2026, Pi Network announced a crucial roadmap for a series of mandatory protocol upgrades. This wasn't just a minor patch, it was a significant overhaul of the network's core engine. The plan involved a sequence of updates: v21.2, April 6th, v22.1, April 22nd, v23.0, May 18th, 2026. Each upgrade in the sequence built upon the last. But the star of the show was undoubtedly protocol version 23.0. This version was described as a major architectural shift, heavily influenced by improvements from the Stellar Core, the underlying technology that the Pi Consensus Protocol is based on. The primary goal of version 23.0 was to deliver substantial enhancements in transaction speed, network efficiency, and overall security. For the end user, this translates to faster payments and a more reliable network. For developers, it means a more powerful and stable platform to build upon, which is essential for a healthy ecosystem. The most anticipated feature of the version 23.0 upgrade was its promise to enable full smart contract capabilities. Smart contracts are self-executing contracts, with the terms of the agreement directly written into code. They are the fundamental building blocks for almost everything in the world of decentralized applications, including decentralized exchanges, lending platforms, and complex gaming economies. Without smart contracts, a blockchain is mostly limited to simple peer-to-peer transactions. Adding this functionality was a critical technical prerequisite for Pi to evolve into a competitive Layer 1 blockchain capable of hosting a vibrant ecosystem. The successful implementation of these upgrades, especially version 23.0, is seen as a make-or-break moment for the network's technical ambitions. It marks the potential transition of Pi from a simple payment network to a full-fledged smart contract platform, putting it in the same league as other major blockchains. This is incredibly bullish for the project's long-term potential because it unlocks a massive new frontier for utility and developer activity. A more capable and competitive blockchain can attract more innovative projects, which in turn creates more reasons for people to use and hold Pi, potentially driving both adoption and value. A cryptocurrency is only as valuable as what you can do with it. Recognizing this, the Pi network has been heavily focused on fostering a developer ecosystem to create real-world utility for the Pi coin. Pi Day on March 14, 2026 marked a significant push. The team introduced several new tools: App Studio Pi Launchpad, Testnet. The App Studio provides developers with the resources to build applications that integrate with the Pi network, while the Launchpad is designed to help new projects get funding and exposure within the community. The core idea is to transform Pi from a mining-focused community into a bustling digital economy. The ecosystem is already seeing the growth of various applications built by developers from around the world. These aren't just theoretical concepts. Many are functional platforms accessible to the network's more than 17.7 million KYC-verified pioneers. These apps allow users to spend their Pi on actual goods and services, creating a circular economy where the coin is transacted on the blockchain. When creators build useful apps, they can earn real Pi, which incentivizes the development of higher quality and more engaging services. Among the most popular categories of apps emerging are e-commerce marketplaces, gaming platforms. Section 6. The market speaks. Exchange listings and price realities. Once the open mainnet was live, the inevitable happened. Cryptocurrency exchanges began listing the Pi token for trading. Major platforms like OKXBidgetGate.io were among the first to offer Pi trading pairs, finally giving the coin a public market price. More recently, the announcement that Kraken, a major US-based exchange, would list Pi sent a wave of excitement through the market, causing the token's price to jump by about 30% in a single trading session, according to CoinGecko data. However, the price journey has been a roller coaster. Shortly after its initial listings, Pi experienced a speculative frenzy, with its price peaking at around $2.10 on some exchanges. This early hype was followed by a significant correction as the market settled and more coins became available through migration. By February 2026, about a year after the open mainnet launch, Pi was trading at a much more modest price of approximately 0.187. This volatility is common for new crypto assets, but it serves as a stark reminder that price is driven by many factors, including market sentiment, token supply, overall crypto market trends. Despite listings on several reputable exchanges, Pi has not yet been embraced by all the top players. As of early 2026, neither of the industry giants, Binance Coinbase, had confirmed any plans to list Pi. While Binance did run a community poll in 2025 where Pi received significant support, the exchange has not yet acted on it. This absence from the top-tier exchanges remains a point of concern for some investors. Furthermore, the project has faced outright rejection from some corners of the industry. The CEO of the exchange Bybit, for instance, publicly refused to list the token and labeled the project a scam, citing warnings from authorities in China. These mixed signals from the market create a complicated picture. On one hand, listings on exchanges like Kraken signal growing legitimacy and provide essential liquidity for the ecosystem. On the other hand, the refusal by some major exchanges and the vocal skepticism from figures like Bybit's CEO highlight the controversy and risk that still surround the project. For the average pioneer, this means the market's perception of Pi is still very much in flux. The price you see today is a reflection of this ongoing debate, balancing the project's massive user base and technical ambitions against its slow development timeline and the skepticism it has attracted. Section 7. The good, the bad. The unknown. When you step back and look at the Pi network in 2026, you see a project with clear strengths and undeniable risks. On the positive side, its biggest asset is its massive and engaged community, with over 17.7 million KYC-verified users. Pi has a distribution and network effect that most crypto projects can only dream of. The barrier to entry is virtually zero, as it's free to mine on a device you already own, which has allowed it to achieve a scale of global adoption that is truly impressive. This user base is a powerful foundation for building a vibrant ecosystem of apps and services. Another major positive is the project's recent push for mainstream credibility and ecosystem development. App Studio Launchpad Pi's sponsorship of the Consensus 2026 conference, a major blockchain event. Grayscale Ripple securing a mainstage speaking slot was a strategic move. To discuss Pi and artificial intelligence, it's meant to attract developer talent, institutional interest, and potential partners, signaling that the project wants to be taken seriously on the world stage. However, there are significant risks and criticisms that cannot be ignored. The the project's development timeline has been notoriously slow, leading many to question its viability over the years. Concerns about centralization also persist. The Pi-Core team still holds significant control over the network's development and governance, which runs counter to the decentralized ethos of cryptocurrency. This slow path to true decentralization is a point of contention for many in the crypto community. The project has a lot to prove in this regard. Then there's the market reality. The token's price has been highly volatile and is down significantly from its initial launch day peak. The refusal of some major exchanges like Bybit to list Pi, with its CEO going so far as to call it a scam, casts a shadow of doubt. This creates a polarized environment where some see Pi as the future of accessible crypto, and others view it as an overhyped project with questionable fundamentals. These contrasting views highlight the uncertainty that still surrounds Pi's ultimate success, making it a high-risk, high-potential endeavor. Section 8. Looking ahead, key milestones and potential paths. As we move through 2026, the future of Pi Network hinges on a few critical milestones. The most immediate and important are the successful deployment of the protocol upgrades, especially the v23.0 release scheduled for May. This upgrade is the technical gateway to smart contracts, which are essential for unlocking the network's full potential. If this rollout is smooth and delivers on its promises of enhanced performance and functionality, it could spark a new wave of developer interest in dApp creation, providing a major boost to the ecosystem's utility and the public's confidence in the project's technical capabilities. The one-year anniversary of the open mainnet in February 2026 was a symbolic milestone, but the real test lies in what is built on that foundation. The growth of a genuine utility-driven economy is the next major hurdle. This means watching to see if the apps being built in the App Studio gain real traction. Are people using Pi to buy goods on marketplaces? Are they engaging with games and services? The success of these applications will be a direct measure of whether Pi can transition from a speculative asset to a currency with real-world demand, which is the key to sustainable long-term value. Looking at the potential paths forward, there are a few likely scenarios. The most optimistic outcome is that the v23.0 upgrade succeeds, smart contracts work as intended, and a wave of innovative developers builds compelling apps that attract millions of users. In this scenario, increased utility drives demand, more major exchanges like Binance or Coinbase could decide to list Pi, and its value could see steady growth. This is the future the core team and its community are hoping for, where Pi becomes a leading platform for Web3 applications and peer-to-peer commerce. A more pessimistic, yet possible outcome is that the technical upgrades face significant delays or bugs, shaking developer confidence, or, even if the tech works, the ecosystem fails to produce a killer app that drives mass adoption. In this case, utility would stagnate, and Pi's value would likely remain low and primarily driven by speculation. A middle ground scenario, perhaps the most realistic, involves slow and steady progress. The upgrades roll out with some minor issues, a handful of apps find niche success, and the network gradually carves out a place for itself in the crypto world, experiencing ups and downs along the way. Section 9. The final verdict. Think. Don't just tap. So, where does this leave us with Pi Network in 2026? After years of tapping a button and waiting, the project has finally entered the real world. A live open mainnet, millions of KYC-verified users with migrated coins, listings on major exchanges, a tangible market price. The journey has moved beyond pure speculation. It's now defined by technical execution and ecosystem growth. The open mainnet launch was step one. Now the focus is building a valuable, useful network on that foundation. Upcoming protocol upgrades are the next big focus. v23.0, with the promise of smart contracts. This represents the next major technical test. Smart contracts could elevate Pi from payments to a platform for dApps. The success or failure of this rollout will be a major signal for Pi's future. Long-term value won't come from specs alone. It depends on the utility developers build, and whether users actually adopt them. Growth of marketplaces.